Up on it. Good afternoon. Good afternoon. Today's topic in our weekly Zoom meeting will be an introduction to funded companies. So welcome for those of you who are here on time. Let me do a couple of things. Here's the agenda. I want to basically kind of give you a brief history of how funded companies actually started, how it came to be where it is right now, where everybody's talking about it now. And actually more and more people will talk about it, just as Robinhood became popular for the retail traders. I think it's a matter of 1 to 3 years before everybody starts talking about funded companies. And we have the opportunity to be in the early stages of it. So for that reason, I'm excited about it. So we'll go dive deep into it, what the process is from A to Z. And then the next agenda will be talking about how I came about with a roadmap to $1 million in 1 year, how that is actually possible. And then towards the end, we'll open up for Q&A on funded companies. And once we run out of that, the official recording will stop. But then I'll stay on for as long as you want me to, and we'll go through different stocks, look at their charts, and take a look at how it'll look moving forward in the next 1 to 3 to 6 months. Because I'm really looking more and more towards swinging stocks and moving away more and more from trading options and getting deeper and deeper into futures. And I'll tell you why that is advantageous in several ways. Okay, so that is the agenda for today. So let me first begin by giving you a history of it. I'm sure some of you have watched or have seen the TV show Billions, or seen previews of it. Billions is kind of like the the super excited version of what hedge fund companies would do. And when we think of hedge fund companies, we think of the 2 and 20 rule. You have to be a qualified investor, have at least $1 million of liquidity plus another, I think, 2.5 million in assets in order for you to be considered qualified, and then you can get into hedge funds. And typically, the average private client who gets into hedge funds are not the individuals, unless you are, a multi-millionaire, like not just 2, 3, 4, or 5 million, but like 20 million and plus, billionaires, right? As well as trust companies, like the unions that have their pension funds and things like that. Those are the clients of hedge fund companies. Now, and that's where you kind of get to catch some of that when you watch the TV show Billions. Now, in terms of the person who gets hired, that lowly trader, what was the typical thing? I went to NYU, studied for my MBA. There was a special 5-year program, and I said, hey, I'm going to do that. That's all I want to do. So I actually applied to only one college. So if I didn't get in, I was really, really SOL. So fortunately, I got in, and I got accepted into that special 5-year MBA program where you complete your undergrad and your MBA all in 5 years. And one of the things that I wanted to be able to do is go to these major companies and be able to trade. And so the way that works basically is, let's say you have a hedge fund company based out of Wall Street, and each and every year they take all of these applications, and they will accept maybe 1%, 2% of the people who have applied. And let's say, when they first start, they would have maybe like 200 interns who are starting the company, and they are the lucky few, right? And for the next 6 months, they would teach them the A to Z of trading, from starting with fundamentals and then going to technicals, all the charts. They would test them along the way, each week, each month, and they have to pass those things, right? And at the end of 6 months, what they will do is, based upon the tests that they have done, based upon the paper trading that they were given to do, and the different tasks that were given to trade, this week we want you to trade futures. This week we want you to just trade this one stock. This week we want you to trade FX, so on and so forth, right? What they will do out of those 200 interns after 6 months, it's basically hire the top 1 to 2% of those. So you're looking at, maybe 4 or 5 of them out of the 200 that get hired. and then the rest gets cut off. It's like, thank you very much. You're not suited for this type of business. Hasta la vista, baby. And they're basically given their walking papers and they're gone. Okay. Now, out of those who are hired, now they say, okay, now you can trade. And they get so excited, but then they realize once they get in front of the terminal that it's not real trading, it's paper trading. And they paper trade for like 3 months, 4 months. And you have to show consistent, I mean, really, really consistent returns and profit upon profit upon profit. If out of those 4 or 5 who got hired, one of them barely beats the indices rather, while everybody else is doing like, 40%, 50%, 100% during those 4 months, guess what? That lowly person gets fired. They get their walking papers and move on. Now, that's not the case with every single company in Wall Street, but this is like the cream of the crop, and typically that's what they do. And then after you have proven yourself over and over again for almost a year, that's when they give you real money. Now, when they give you real money, obviously, it's not $100,000 or $50,000. You're looking at least $1 million or more. And then if you do well with that, they'll give you more, and so on and so forth. And so that's their bread and butter. They'll get a measly little salary because after all, you have to live in New York. But at the end of each quarter, typically each quarter, you get to keep a certain percentage of the profits. Okay. And typically as a junior trader, it's 10%. Now the senior PMs, they get 40 to 55% off of your back. They earn their keep. They've shown their track records over the years and they have moved up. So that's what you eventually want to get. But as a junior trader, when you first start in the first few years, typically 2 years, right? You get 10% of the profits. That's it. That is it. So if you made $1 million in that 1 year, you got 100% return in 1 year, you get 10%. Okay. And then the rest of it, about 30% of it would actually go to the hedge company, or if it's a private company, will go to the owners and principals. All right. So that's basically how hedge companies had in Wall Street have functioned for many, many, many decades. Now, in a lot of the fact that we have the internet right now and everything is so readily available, we've been able to bring, just like Robinhood was able to bring the stock market to the average retail trader, funded companies now are able to bring this to the average trader as well. And so just to, and there are many companies, but today I'm just going to focus on Apex and how it began, and I'll walk through their process basically. And so Daryl Martin is the founder of Apex, and he actually started this back in 2008, and he had his fellowship of traders, but it wasn't until 2021, at the beginning of 2021. So you're looking at about 2 years that he officially founded. The LLC was formed, and the funded trader company has taken off since then. They are by far the leading company. There are a lot of copycats out there, and there are a lot of people, a lot of other companies that have come into the picture with their differences and nuances. And who knows who's going to become the elite company, 5-10 years from now. But so far, Apex has been the way to go for the low cost. Now, why would you consider a funded company in order to trade? Well, consider, your situation, right? How many of us have traded, day traded perhaps, or traded our own retirement accounts and have been sucked down with the rest of the market, okay? Some people have lost 20%, 40%. Some people have lost 70% of their retirement account just in the past year, okay? And so now you're looking for, there's got to be a better way mindset. And really, the funded companies become a means through which you can find a better way, okay? So who is it focused on, okay? Basically, there's a niche market, okay? It's not for everybody. It's definitely not for the swing trader. I mean, at heart, I'm a swing trader. And when I first got involved with Apex, oh my gosh, I just couldn't handle it, just watching the screen every single second. I felt chained. But anyway, fast forward to where we are right now. What it meets, the niche that it meets is for somebody who is a day trader, for somebody who likes to trade futures and they want to move away from options. Because with options, and somebody would ask, what are the differences? Well, with futures, you don't have to know Greek. So those of you who trade options understand exactly what I'm talking about, okay? But with futures, it's also great for those who are working full-time, okay? Some of us in our Futures Pro group, you're working, 50, 60 hours a week, okay? But the beauty of futures is that you can trade it from Sunday night all the way to Friday early evening, okay? Nonstop, 24/6 if you want to call it that, right? So it appeals to those who are day traders who want to trade futures, but also have low capital, okay? You don't have $500,000 or $1 million to be able to dollar cost average into Microsoft and Apple and have 10,000 shares, okay? You're not a Warren Buffett. None of us are. And so this becomes a way for us to leverage the low capital that we have and use other people's money, namely the funded company, in order to be able to do that, okay? So let's get right down to it, okay? So here we go. Oh. Let me get rid of that. So as I said, Apex is for the day trader, future trader, and those who don't have much capital. All right. This is the fellow who founded. He's actually a rancher and a day trader at the same time. And he said, hey, I have an idea. Let me do this. And he started it. Trustpilot 4.8 stars, which is pretty good. And basically what you do is you start with an evaluation stage. Okay. And you can choose any account size to want to fund. This tells you how many contracts, either minis or micros, that you can trade. We'll talk about the differences. And initial prices were this much, okay, to start. And if you fail, you're out $200, $300. If you wanted a $300,000 account, you're out $700 after taxes, okay? So it's not cheap. But these days, I think what they're doing is they're moving into, and part of it is because of competition from Buell Knox and Lilu and Elite Trader, UProfit, and a whole bunch of little ones that are popping up everywhere. They want to stay ahead of it, and basically the market has driven it such that they're basically giving you a permanent 80% discount on the price of evaluation. So a lot of people are like, hey, I've lost $100 very, very easily within seconds sometimes. What's 30, $40 in order to try an evaluation. So you will first sign up into this, and the majority of us, we go for the 50. And some people choose the 25 because it's a little more advantageous, okay? So once you sign up, you would have to download NinjaTrader and this thing called Rhythmic, and then you have to connect it. And it's an arduous process. But once you're done, okay, then you're good to go and you're set up, okay? So a $25,000 funded account, for example, in order for you to pass it, you need to hit $1,500 profit, and then you're done. There's also a trailing threshold. In other words, if in your trading, you lose $1,500 on a trailing basis, okay? So at any point before you reach your profit goal, if it drops down and you lose $1,500, you're out. You have failed that evaluation. You have to start all over again. In the $50,000 one, and when I didn't know what I was doing, I must have failed like a dozen of these, right? You try to hit the profit goal of 3,000. That's how you qualify. I would get close to it, and then the trailing threshold would hit me, and I would get disqualified. So this is a profit goal. This is the trailing threshold. So here you have it. All right. And here you have it. These are the trailing drawdowns. So based on how these work, you choose the one that best suits you. And my recommendation is the 50K. And we'll talk more about it once we get into leveraging. All right, so once you do that, you have to at least trade for 7 days or at maximum 30 days. Okay, so you have a whole month to qualify in order to pass. Okay, so the slower the better, but if it takes you 20 days to qualify, that's okay. Once you pass it, fantastic. What happens next is stage 2. You get into the funded stage. Okay, and so once you get into the funded stage, what happens is your evaluation account gets canceled, so you don't get charged on a monthly basis. But now you have to pay the account fee for once you are funded. So for the 50K, okay, this is one reason I like it over the 25 because it's a $10 difference. For a 50K account, you pay $140 plus tax. And then you update your NinjaTrader and you're good to go. And you can trade off of that. And any profits that you make over $50,000 plus 100, okay, you're able to keep those profits. Okay, so there's a special bonus in the first $25,000 profit, but typically is a 90-10 breakdown. Okay, so unlike working in Wall Street where you only get to keep 10% of the profits, in this setup, you get to keep 90% of the profits and the company gets to keep 10%. Okay, so once you get into the funded stage, this is what happens. You have you still have the trading drawdown up until you reach the $50,000 mark. So if we take this $50,000 account, wait, hold on. If you take the $50,000 account, you have, I'm sorry, what was the trade? Yeah, 25. So you can go down to 47,500 before you failed the performance account and you have to start all over again. Okay, so some of my accounts have gone down to 49,000, 48,100. Okay, and I have to scale back and continue raising it. And so you can continue raising it, and once you hit $2,600 in profit, okay, your threshold has moved up to $50,000 and 100. And then anything above that, it becomes a buffer. Okay, you'll be able to trade a little bit freer. So when your account is up $60,000, now instead of having a $2,500 buffer, you have a $9,900 buffer, and so on and so forth. So you basically want to make sure that you have a nice big buffer so you never fail your funded account. PA basically means a performance account. Okay, so based on your performance, you get paid. Okay, so you have to trade at least 10 days in order for you to be able to withdraw your profits. And typically the rule of thumb is you want to withdraw only half of your profits. The other half will stay there in order to create a buffer. So every 2 weeks, okay, if you're trading every day, every 2 weeks, you can request a withdrawal and just take out half of your profits. All right. There are some minimums and maximums in the first 3 months. We'll skip that for now. And then after month 4, that's when you can have a profit of $50,000 and you can take out $49,000 of it, and you don't have those limits. Okay, now that's basically how a funding company works. Some companies have a 2-stage evaluation. Most majority of the companies is just a 1-stage evaluation. Once you pass, you get funded. Once you get funded, just make sure that you're above the threshold, and that's when you start getting paid. The turnaround for most people typically is about 2 months. Okay, some are faster, but generally rule of thumb is about 2 months. Okay, now let me just stop here and tell you that based upon the stats and this was unnamed, but I think it comes from Apex. Based upon the stats from Apex Trader Funding, 96% of traders fail. And of those who pass, half of the people who pass do not make any money from their funded accounts. Namely, once they got funded, they failed and they go back to square one or completely give up. And they don't come back. So when you count all of those, basically about 50%. Okay, that's my guesstimation now. The first number, 96.1% failure rate, has to do with the evaluation. 50-50 is my own guesstimation that people don't get paid. Okay, so do people get paid? Yes, they do. They do get paid. Okay, but in order for you to get paid, you basically want to be in the elite 1 to 2%. So then the question is, oh my gosh, do I have the wherewithal to do that? How can I do that? There's no way, you might say that. Well, this is where I was inspired, I guess, to write a roadmap to $1 million. And I basically took 3.5 days to finish it. I finished it at 12:15 a.m. on New Year's Day, as a matter of fact. I was working through, while everybody else was celebrating getting drunk, I was working through this and just typing away. And that's my inspiration. And I call it my manifesto to the road to $1 million. And so I put it out there, and already we have like close to 20 people who have hook, line, and sinker, 100% blindly are following my plan. And who knows what'll happen. So that is, that is basically the gist of how we are able to do that. So how can we do that? Well, there is this thing called leverage, okay? And how do we leverage it? And I will show you soon. But think about how we leverage stock trading, okay? For those of you who trade options, what is options? You're leveraging the power of options in order to trade, 1,000 shares or 10,000 shares of Apple or Tesla, okay? And you're taking a risk of losing it all, but you're not losing as much as actually owning the stock. So if the price of, like for example, what's a stock that was really, really up? Coinbase. Okay, at one point it was like in the $300-400 per share level. Now it's like in 2 digits, right? If you owned 1,000 shares of Coinbase and you lost that money, that you're looking at hundreds of thousands of dollars that you have lost. Whereas if you leverage it with options, you've only lost the money that you've put in, which could have been like, if you did like 4 or 5 contracts, that could be about $5,000. That's the most that you can lose. But if you trade it right, you're leveraging the power of that option to be able to make, $10,000, $20,000, $30,000. Okay, so how do you leverage funded accounts? Apex is the one that is able to allow you to do that, because unlike other companies, with Apex, you can have up to 20 accounts. If you take 20 evaluation accounts, successfully pass it and get it up to 20 PA accounts, and get a trade copier, we use we use this thing called Replicanto. Okay, you get a Replicanto, and you trade those 20 accounts and use a copy trader. You can actually leverage your money such that if you were to make $100 a day, average $100 a day in one account, that actually multiplies into 20 accounts. So you actually made $20,000 per day. If you multiply it to the 20 trading days that are on average available in a given month, that comes to $40,000 a month. If you average $200 a day, that's $80,000 a month, which brings you to about $960,000 a year. Hence, the road to 1 million. Okay, so that's how you're able to do that. Okay, now what do you need? Let me go over very quickly. This is a few of the pages of the roadmap to 1 million, or the road to 1 million. Some of the things that you need to have right away is you need to have a very fast PC. I thought I had one, but I actually have to upgrade it, or a laptop. And I'm looking to, my first purchase will be a trading laptop from one of those firms. Casey was actually the one who turned me to it. You need a fast internet. So I upgraded mine from half a gig to a full gig. And I actually have a cable company as a backup, just in case my fiber goes down. Okay, now that's what I'm doing. You don't have to do that initially, but that's what I am doing. And obviously have a generally good understanding of the stock market in general, futures and options in general. Now we help you with that, but you need to at least have some basic knowledge in order for you to be able to do that. What's it going to help? How can you make it? Grit. You really need to have grit. Okay, so you can read up on that later once I pass it on to all y'all. I'll post up the PDF at the end on the chat, so that way you can download it if you do not have it. Okay, I use the Futures Pro package, which is my algorithm. I use TradingView Premium, okay, in order for my algorithm to work. As a matter of fact, my algorithm is embedded into TradingView. So when you purchase this, you're actually just purchasing the license, not the software. Tick Strike is something that I accidentally got to find out through one of our traders on our Discord, and boy, that was a game changer. So yeah, so you can sign up for a tick strike and do either annual or lifetime, and it'll definitely help. Before I move on further, this is what I look at. I had one of those days where I was very discouraged and I had to look at this. And this is very recent, as a matter of fact. This guy, I believe, is Victor. He's on YouTube. There's an interview of him on YouTube. And this is his payout in December 27th of 2022. And he got paid out like close to $800,000 towards the end of the year, basically trading the way we want to be able to trade, which is leveraging it. Okay. So the action plan basically is getting 20 evaluation accounts. Okay. That's what you're going to need in order to reach the goal that I have set. There's Replicanto. So here's the link to it. And this is a general discount that's higher than the 10% discount that you normally get. You just need a one machine license for Apex. But if for some of you who do Buell Knox and other companies, get the 2 machine license, it'll save you a ton. Okay. So that's basically how you would begin it. Okay. Now, the big thing with that is once you have those 20 accounts and you're able to use the copy trader, okay, then you start using all of these tools in order to each and every single day be able to hit those numbers. Okay, so early on, this was my one of the day's results. Trading it with Replicanto. These are all evaluation accounts. It ranged from like $250 to $1,400 on a given day. Once I got my full account, I had 19 PAs, and this was one of the days where I averaged between 500 and well, the range was net of fees, $480 to as low as like $191. Okay, this is all because of slippage on the Replicanto. So this is how I've been able to do it.